Welcome to The Explainer. Today, we're digging into a massive and kind of mysterious bet that was placed right in the middle of this AI revolution. It's a story that really shows where the smart money might be flowing. You know, not into the flashy software everyone's talking about, but into the nuts and bolts, the picks and shovels of this digital gold rush. And it all revolves around a company you've probably never even heard of.
Okay, so the main clue here is this number, over $53 million. That's a single bet somebody placed on the stock market. Now, this isn't some random person throwing money around. This is a seriously high-conviction move by a very sophisticated player. And if we follow this money trail, it might just lead us to where the real value in AI is hiding.
But here's where it gets really weird. The mystery isn't just the size of the bet, it's how it's structured. See, this isn't a bet that the stock is going to shoot to the moon. It's actually the complete opposite. It's a wager on stability, a promise to step in and buy, but only if the stock takes a massive dive. So it's not a lottery ticket. It's more like a carefully set trap to buy an amazing company at a huge discount.
So who is this company at the center of it all? Well, it's a firm called Celestica. And to really get why someone would make this kind of unusual, massive bet on them, you first have to understand the incredible transformation they've gone through.
You see, Celestica has completely reinvented itself. For years, they were just a low-margin manufacturer, building stuff other companies designed, and basically scraping by on these tiny 1% to 3% profit margins. But they pivoted hard. Now they're a high-value designer, creating their own critical solutions for the AI industry. And look at that, their margins have more than doubled to over 7%. This isn't just a little change. It's a whole new, much more profitable ballgame.
And wow, you can really see the results of that pivot right here. I mean, the numbers on this slide kind of speak for themselves. Revenue is growing at a fantastic 28%, but the real story is down on the bottom line. Their earnings per share, or EPS, is up 52%. Think about that. Their profits are growing almost twice as fast as their sales. That is the sign of a super efficient business that's really hitting its stride.
Okay, so let's get into the nitty-gritty of the trade itself and see how this clever investor is playing Celestica's turnaround. This is not a simple buy and hope for the best kind of deal. It's way more elegant than that. So the strategy is called selling a cash-secured put, which sounds way more complicated than it is. Here's the breakdown. Step 1. The investor basically makes a promise to buy millions of shares of Celestica, but, and this is the key part, only if the stock price drops below a certain level by early 2026. Step 2. Just for making that promise, they get paid a big pile of cash, right now, up front. And step 3, they wait. If the stock stays up, great, they just keep the cash. If it falls, they're forced to buy, but hey, they get to own a company they love at the exact fire sale price they wanted in the first place. It's kind of like a win-win.
So that $190 number? That's the magic number. It's called the strike price. Right now, the stock is trading over $300, but this investor has drawn a line in the sand. They're basically screaming to the market, hey, I am ready to commit over $53 million to buy this company, if and only if you'll sell it to me down at this level.
And this quote really gets to the psychology of the whole thing. Yeah, the cash they collect up front is nice, but it's not the main prize. This is a super disciplined way to buy a company. The investor figured out the exact price they're willing to pay for Celestica, and now they're literally getting paid by the market to be patient and wait for that price to come to them.
So why is this investor so sure the stock won't fall to 190? Why on earth would they be willing to make this kind of bet? Well, the motive isn't just about Celestica. It's tied to one of the biggest economic waves happening on the entire planet right now.
It all comes down to something called the AI CapEx supercycle. And CapEx is just a fancy Wall Street term for capital expenditures, which really just means spending money. And right now, the world's biggest tech companies are in an absolute spending frenzy. It's an AI arms race, and they're pouring unbelievable amounts of cash into building the infrastructure for the future. They literally cannot afford to get left behind.
And when we say they're spending, I mean the numbers are just insane. You've got Meta, Microsoft, Amazon, all the big tech hyperscalers are on track to spend over $400 billion on AI infrastructure. For them, this isn't optional spending for a rainy day, it's essential. And this massive, non-negotiable tidal wave of cash creates a huge tailwind for companies that build the hardware, companies just like Celestica.
And Celestica isn't just selling, generic parts. They're designing and building the critical nervous system for these new AI data centers. We're talking about these super fast networking switches that are like the highways connecting thousands of AI chips. We're talking about the incredibly dense storage solutions that act as the libraries for all the AI data. Because they offer custom solutions, they lock in contracts years ahead of time, which gives them amazing visibility into their future sales.
But, okay, nothing is ever a sure thing, right? No investment is risk-free. So what's the one big thing that could just torpedo this whole growth story and make this $53 million bet go horribly wrong?
And here it is, the big one: customer concentration. You see, Celestica's main vulnerability is that more than 3/4 of its most important revenue comes from a very, very small group of incredibly powerful customers, those same tech giants that are fueling the spending boom. They've got a lot of their eggs in just a few baskets. And this is the core argument against the company, the nightmare scenario. If, say, Meta suddenly decided to slash its AI spending, or even just switch to a different supplier, it would blow a massive hole in Celestica's revenue, like overnight. A change in plans from just one of these big players could unravel the entire growth story and send the stock into a free fall. So you've got this huge opportunity on one side and this really big risk on the other. How does our investor weigh those two things and still sleep at night? Well, it all comes down to a classic investment idea: the margin of safety. What the investor has done is built this massive cushion into the trade. Look at this. The stock is currently trading way up here, around $304. It would have to completely fall apart, crashing almost 38% just to get to their $190 purchase price. It would have to smash through several major support levels. These are price floors where buyers usually step in before the bet is even in danger.
And here's the kicker. This is maybe the craziest part. Even with all this incredible growth, the stock is actually cheap, especially compared to its peers. We're looking at a metric called the PEG ratio, and it's basically a cheat code to see if you're overpaying for a company's growth. Generally, anything under 1 is considered a good deal. Well, with its explosive growth, Celestica is the only company here that even comes close, offering that superware combo of high growth at a really reasonable price. And that brings us to this final number, which is really what it all boils down to. Even if the absolute worst-case scenario happens and the stock does fall all the way to 190, the investor gets to buy a company that's growing at nearly 40% a year for just over 23 times its projected earnings. In today's market, that is a flat-out incredible bargain.
So when you step back and look at it, this $53 million bet isn't just a trade. It's a statement. It suggests that while everyone else is chasing the glamorous, flashy AI software companies, the smartest money might actually be betting on the boring, essential, and foundational hardware that makes the entire thing possible. It's really a masterclass in patience, in value, and a huge bet on the hidden machinery that's quietly driving this whole AI revolution.